Hello and welcome to today's webcast, How to Increase Operational Efficiency with Optimal Fees and Expense Management. My name is Victor Anderson. I'm Editor-in-Chief of Waters Technology. I'm happy to introduce to you today members of our panel, including Ben Harrison, who is Director at Credit Suisse Securities in New York. Also in New York is Alex Ramirez, who is Practice Leader at Helix Consulting. Barrett Malesha as well is also in New York. He's an Executive Vice President at SmartStream Technologies, and SmartStream is today's sponsor. And as I mentioned, my name is Victor Anderson, and I'm based in London. Today's event is scheduled to run for approximately 60 minutes and will consist of a panel discussion punctuated by 4 poll questions, which I'll push out to audience members during the course of this webcast. I'll be grateful if you take the time to respond to the questions. Simply click on the most appropriate option to each of the questions and you're done. Each question will be open for approximately 5 minutes only. Finally, if you have a question for any of today's panelists, you can direct that question to the appropriate person via the Ask a Question tab underneath the slide panel on your screen. But before we commence today's discussion, I'd like my fellow panelists to introduce themselves and explain their remits with respect to today's topic of discussion. So first to Ben, and as I mentioned, Ben is at Credit Suisse in New York City. So Ben Harrison, over to you.
Hi, thanks, Victor. Yeah, so Ben Harrison, I've been at Credit Suisse for 9.5 years, and my remit at Credit Suisse is I look after our trading costs, so brokerage, clearing and exchange fees, and that's really all through the process in terms of engagement with the various different providers around fee schedules and all the way through the accounting, reconciliation and processing of those ultimate invoices.
Good. Thanks, Ben. Over to you, Alex Ramirez from Helix Consulting in New York. Alex?
Hi, good morning and good afternoon. My name is Alex Ramirez. I'm a practice lead at Helix Consulting. I've got over 20 years of financial experience working and developing savings strategies for a number of different Tier 1 financial institutions. My remit has been predominantly on the operational efficiency, expense management, and supply chain sourcing enterprise, having had most of my 20 years of experience working in developing a strategic brokerage, clearance, and exchange practice around how to influence that, number one, by creating the transparency around the expense drivers, and then number two, defining what those expense drivers are relative to the savings levers by way of vendor negotiation, demand management, and operational improvement. Some of the clients I've worked with in the past have included Goldman, Credit Suisse, BNY Mellon, as well as a number of other hedge funds and institutional markets. So I'm happy to be participating in the discussion today to talk about where the industry is, and I look forward to talking more about it.
Good. Alex, thanks very much. And finally, Barrett Malesha, who is representing SmartStream Technologies today. Barrett is in New York City. Over to you, Barrett. Can you want to tell us a little bit about your role at SmartStream?
Sure. Thank you, Victor. Hello, all. This is Barrett Malesha. I head the fees and expense management business at SmartStream. What does my remit include? Basically, our approach towards our solutions is around improving transparency and efficiencies around expenses. That includes consolidation of all the fees and expenses processing within a single enterprise platform, and consolidate fees and expenses information into a global repository for providing analytics and reporting. The other area that we focus on is around increasing automation and automating processes, as Alex mentioned, increasing operational efficiencies through automation and improved financial controls. The next area of our focus is around cost optimization and reduction, where we develop standardized enterprise-wide organizational spend views and enable our stakeholders to execute on those cost strategies. And lastly, I would also bring on what we provide in terms of building solutions across market, providing coverage to support cost-plus billing, custody, and billing relating to CMDAs.
Good.
Thank you.
Thanks very much for that, Bharat. Now, to today's audience members, as we know, capital market firms have never been under greater pressure than they are right now to provide investors, regulators, and of course their own internal stakeholders with greater transparency around the various fees that they incur during their typical days, and especially those related to execution and transaction costs, and given how directly those costs impact the bottom line. So today's webcast will identify the various day-to-day costs that typically affect financial services firms' profitability, while also looking at the technologies that they can either deploy or develop to help them better identify the sources of those costs, especially and most notably those hidden costs that they typically aren't aware of. It also focuses on the tangible business benefits that they stand to enjoy through managing those costs in a more systematic and disciplined manner. So the first issue that we're going to be discussing now, today, and I'm going to put this to Ben, is typically when we talk about hidden costs and fees. Ben, from your perspective, what do we mean by those, and typically what are those hidden costs and fees? Do you want to give us a kind of a flavor of that from Credit Suisse's perspective?
Yeah, absolutely. So in my view, when we talk about hidden costs and fees, I think in terms of the costs that we incur through the life cycle of a trade, when you have a trader executing, initial fees could be, fairly transparent to them, that they'll know that they will pay an interdealer broker or an exchange fee. But it's then that those fees tend to be fairly layered in terms of they probably have to pay for the confirm, the clearing. Do they use a certain type of index? Is there a compression that happens after that? And those they tend to be hidden costs to some extent. They're not overly transparent to the trader in terms of all the different types of layers and fees that they will incur through the life cycle of that trade, and really being able to shine a light on that and articulate that to people and bring all of those to the forefront for the decisions that they need to make in real time is rather important.
Right. Okay. Alex, is that consistent with your view? You mentioned that you've worked with Credit Suisse, you've worked with Goldman, and you've worked on the buy side with hedge funds as well. Are those typically the types of hidden costs, the ones that Ben was referring to now? Are there any additional ones?
Yeah, I mean, I would further caveat by saying historically when we look at the variable costing landscape, a couple of the known factors are technology and communications, the brokerage, clearance, and exchange, which I group as the proverbial transaction-related costs. And then I would say, looking at some of the more people-related costs associated to the professional services, the business developments. Overall, and that kind of makes up the variable landscape. Overall, variable fees is very wide and deep in the different subcategories that comprise that. So there's a lot of areas for what we would define as hidden costs. In looking at the gravity of working with other firms around the scale of expenses and where they view some of the pain points of hidden costs, clearly technology and communications is one of the larger areas of overall expense that also lends its way to having where you would see some of the hidden costs. Examples of that would include at a product line such as connectivity, for example, the individual EMS and OMS costs that firms absorb on behalf of clients to be able to have those connection sessions and gain the execution routing capabilities. Things like the market data, so not just what they're paying for as part of the consumption to be able to derive pricing, but where they're obtaining that data from, whether it be the large institutions such as the Reuters and Bloombergs of the world, or whether they're interacting with that data directly from the exchanges. And that's where I typically see a lot of those hidden costs. Clearly then, to Ben's point, within the brokerage, clearing, and exchange avenue, there's a lot of uncertainty and a lot of opportunity for hidden costs, given the obscurity of, number one, how those expenses are manifested into the financials, and then number two, just the general layer of opportunity of where those costs can arise when you think about the throughput from an execution all the way to a clearing event. Things that are less talked about is really the people-related costs. When you think about the professional services, consulting, and other types of fees associated to that. But most of the areas that I have focused on with my clients have been on the transaction side.
Good. Well, hopefully, Alex, we'll be able to touch on the issues around attracting the right people to the role, figuring out, how to manage those costs as well as possible and as transparently as possible a little bit later on when we when we delve down into the subject matter. A question for Bharat, and that is on the same issue of hidden costs and fees. Bharat, what are you seeing from your sell-side and buy-side clients? What is SmartStream kind of identifying? Where are their pain points in terms of identifying their hidden costs and fees? What are you seeing?
Thanks, Victor. So one of the things you look at it, we are in a very complex environment from a financial services industry standpoint, given the global nature of the business. So where the biggest challenges for these firms, we talked about all these different fee categories, where it lacks is the participation across the firm from various regions. Because each of these regions bring in kind of different variants of those costs. It becomes very it gets pretty complex and difficult to analyze these costs when you look at a global view within the enterprise. So I think what is lacking is automation or robust information models to kind of enable them to kind of make those investments in actually understanding those costs from a global nature. It requires a lot of diligence and focus and to maintain that competitiveness around keeping their costs in check. So what we basically seeing across these firms is that institutions are not taking a end-to-end approach or enterprise-wide approach to this problem. And they're more and more realizing that much of these fees are handled some within the front office, some within the middle office, some within the back office, some within financial control, some within operations. So the fragmentation creates a lot of challenges for these firms. And firms who are coming to us are starting to look at an enterprise view of that cost to understand the depth of those cost drivers.
While we're on this issue, Bharat, to what extent are regulations around, let's say, for example, best execution, and also providing greater transparency to the end investors, to what extent is that driving buy-side and sell-side firms to come to an organization like, let's say, SmartStream and say, we need technology in order to shed a light on this, on these hidden costs and fees? To what extent is regulation a driver?
So there's some extent there's regulations like MiFID II, which is basically kind of forced around unbundling of the commissions between research and execution. So there's a transparent view of that fees to be actually broken out in terms of how they're charging, where they can use research against the quality of research that the firms are providing. We've also seen very recently amendments to Rule 606, which is now looking at reporting the cost drivers at a much more granular level. They're looking for many more different attributions of that execution cost. So there are certain kind of levels of that does impact firms coming to us. But generally, I think what we have mostly seen, people looking for more transparency, looking at actually at a transaction level, understanding the costs and the benefits looking at the business profitability or the client profitability within the space.
Okay. Ben and Alex, I know that we didn't discuss this in the pre-call chat, and I said I wouldn't be throwing any curveballs, but this issue of, are these drivers, are they internal drivers? In other words, are the businesses looking to be as efficient as possible, or are they external drivers, as in clients putting pressure on firms for greater transparency and also the regulators, or is it a mix? I'm going to ask, Ben, do you want to comment, if you can, on the drivers for the greater demand for to shed a light on hidden costs and fees, and then maybe Alex, you could also comment on that as well. Just to what extent is it internally driven, and to what extent is it externally driven, Ben?
Yeah, I think I would touch on something you said at the start of the session, where you spoke around cost management being a particular focus area across financial services as of right now. So a huge amount of it is driven internally, where it's a real drive and hunger to get under the hood of costs and really understand what levers are available, and then again touching on some of the things Bharat mentioned. When we talk about transactional based expenses, it is a very complex and nuanced area. So and that lends itself to the drivers being internally, typically, in terms of having an efficient process around reviewing those, and then the complex nature of the cost really means that you really need to have very good data or solutions to be able to articulate the different drivers and how things move in relation to each other, because they're not always linear in terms of how volumes and fees may move, right? So it does become articulating that internally to the various stakeholders is extremely important.
Brilliant. Thanks, Ben. Alex, do you want to maybe just chime in on, is that consistent with your view of the world as well?
Well, I would say that there's roughly three different areas of drivers. One, from an internal perspective, I would view that it's really kind of the evolution of where pricing has now become integral for cost plus. We have a lot more sophistication in terms of clients who want to understand and want to be billed based off of what their overall execution costs are in a transparent way, and need the metrics and the overall reporting to be able to show them how their individual execution marry back to the individual cost drivers for them to be able to influence, separate and distinct from what the commission numbers would be in terms of what drives the overall profitability. I would say historically, maybe 5 years ago, that wasn't the norm. The norm was more around an all-in type number. Now, as we're getting more into the algos, as we're getting more into the steps from a fixed income perspective, the need to be able to have cost plus pricing is really what's driving a lot of the internal decisions in terms of making sure that the transparency and the governance is there. From an external perspective, it's visible. So, from an EMEA perspective, you've got the T2S items. APAC, there's a lot of new regulatory items that are coming up on the market space, especially if we're thinking about how those execution flows are being specific to Japan and Hong Kong. And then the third thing, in addition to the other regulatory items that were already mentioned, and I would say that the third thing that's really driving the need is a hybrid model. So today, if we take a pulse in terms of the last 8 months, there have been market condition and changes in fee pricing that it's absolutely important to know what the relevance of those pricing changes are, not just to the individual clients, but to their own expense profile. Examples of that include OCC, where prices have changed as of recently, DTCC, and SEC, those prices have changed as well. The Sec 31 fees have recently gone through a transformation in terms of the overall rate that has been quoted. And that just doesn't affect client sell side, it also affects the principal trading as well. So, I would say that it's really a confluence of a number of things: client-driven, external factors, regulatory pressures, as well as the overall need to have a better understanding on what these marketplace impacts represent to the overall execution.
Okay, Alex, thanks very much. Gentlemen, let's leave it there. We need to move on. We need to get into the weeds a little bit and talk a little bit about the technology and the operations side of things, and we're going to be doing that fairly shortly. But first, what I want to do is ask today's audience the first poll question. And the question reads, what do you see as the primary challenge with respect to efficient fees and expense management? You've got 5 options there, and I'd be very grateful if you'd respond to the most appropriate option. You've got about, give or take, 5 minutes to respond to that first poll question, and then we'll look at the responses in due course. The next issue I'd like to broach with today's panelists is, how do capital markets firms go about identifying the day-to-day variable costs that directly impact their bottom line and their profitability? So we've talked about the challenges. Now, how do capital markets firms actually put in place a system or a set of systems that can effectively identify their variable costs that impact their bottom line? And I'm going to ask Bharat to kick this off. Obviously, you're going to come at it from a kind of a technology perspective. And Bharat, in terms of the underlying technology that capital markets firms can use to shed a light on these variable costs, do you want to talk a little bit about typically what that technology might look like and feel like to a capital markets firm?
Thanks, Victor. So first I'll address the question of what firms are doing today. I think what we have basically seen is the maturity model within the industry kind of varies from firm to firm in terms of how they are managing their fees and expenses. So I basically break them out into like 4 major categories or 4 tiers. So one are at the bottom of the kind of of that framework is people or firms who are actually doing things manually and fairly ad hoc in terms of managing those costs. Why they do that is due to lack of approach or lack of automation. They are also missing a significant standardization across the spend categories or fragmentation of the regions or their entities or their line of businesses is fairly fragmented. So there's no standardized view of those costs. So overall, I think there's a lack of transparency around the cost, around their cost base, and it is all managed individually within the business lines. The other type of firms that I would basically say is which are have taken certain opportunities. They have an informal approach. The strategy is not very consistent across business lines, but they have started to implement some sort of automation, but still having a significant amount of manual reporting, collecting information, gathering, and it's very labor-intensive kind of process. Mm-hmm. So they do get limited transparency across the expense categories, but there's no business strategy across enterprise-wide strategy per se. And then there are firms which we have been working with over several years and have come to where they have adapted a strategy globally across enterprise. They have standardized processes. They have a one-stop shop for spend reporting. Their cost allocation back to the businesses are very, very kind of well-defined and very mature in that case. So they have a very high level of kind of cost transparency and strategy around how they're going to report those costs internally to their businesses. And I think they have basically taken, so these are the firms who are now taking opportunity with somebody like SmartStream to expand into kind of, spend categories that they have not actually still covered. And then there are firms who are fully optimized, who have adapted these strategies in the last 5-7 years and put automation in place and gone through a continuous improvement process to be the most optimized within their cost base. So each of these firms come to us with different kind of challenges at different levels. And what we provide from a SmartStream standpoint is a solution that caters across asset classes, across fee categories. Enterprise view, as I first started with, is saying a consolidated, a single instance of the overall spend base, where there's a one-stop shop for all your spend reporting.
Okay. Bharat, thanks for that. I'd just like to thank our audience members for responding to the first poll question. I'm going to push those responses out to the audience members now. You can see that almost 60% said that it's primarily a data management challenge in response to the question, what do you see as a primary challenge with respect to efficient fees and expense management? So almost 2/3 of respondents see it as a data management challenge, which is pretty much consistent with what Bharat has just mentioned. I'm going to pass the same question over to Alex and then on to Ben. So Alex, how the firms that you consult with typically, what are the processes they have to have in place, and also the technologies in order to allow them to go about identifying the day-to-day variable costs that directly impact their bottom line and therefore their profitability? Well, typically, what are those, Alex?
Well, I would say from a overall process, one of the things that they absolutely must have is just an overall understanding of what their execution fact base is relative to the financials that they're seeing today. So discovering where that break is, meaning they're seeing their overall general ledger, which is showing a number of X, versus what they know their daily interactions to be from a broker perspective, or for when they're executing those activities on an exchange, or when they're setting up new lines and connections. So identifying that break, I would say, is really one of the first and premost fundamentals that one can then go back and identify how one can create the additional transparency, the analytics and control, and the governance to be able to support and tie in that break. What I would say is that from a technology perspective, we are seeing a proliferation of different products that support those activities. And one of the pain points is that a lot of the different firms wind up conflating and confusing what the technology support is to be able to create the transparency needed to calculate and also report effectively on those variable costs, to such the point where it almost becomes unusable. And so I spend a lot of time with the firms defining what that product proliferation is, and then identifying what are some of those things that we can do to help improve, whether it's creating the enhancements against the individual systems that are doing it today, or whether we need to create better enterprise connections from the execution all the way to the general ledger financial postings so that they can have that holistic view. The third thing is obviously working on the dirty data. So it's no surprise that we're hearing that feedback from this audience, because it is an issue that fundamentally, requires some remediation. So having had said that, knowing where the tie-in points are between what you're absorbing today versus what you know your fact base to be, looking at where those technologies can tangentially help solve that, and then working to create those enhancements, whether it's through an enterprise application, such that we can then fix the dirty data, is kind of the application approach that we're using today.
Good. Alex, thanks for that as well. I'm going to hand over to Ben in just a moment, but what I want to do is open our second poll question. The second question reads, Does your organization have a formalized framework? This is specifically what Bharat and Alex have just been talking about. Does your organization have a formalized format that seeks to manage its fees and expenses in an efficient and transparent manner? You've got three options there. This will be really interesting. Now, I'm going to hand back to Ben and just talk a little bit about, or ask him to talk a little bit about Credit Suisse's strategy in this respect. Ben, how does Credit Suisse go about identifying its day-to-day variable costs that directly impact its bottom line and or profitability? It's a key component of your day-to-day role, right? So do you want to talk a little bit about the operations and the technology that helps the organization identify those variable costs?
Yeah, so I mean, at Credit Suisse, I mean, we've kind of been on this journey of really investing and developing this area for 10+ years, right. And I kind of agree with the things that Alex and Bharat have mentioned, that an enterprise technology solution is critical to being successful in that area, right? So we have enterprise technology with a kind of a robust data exception and validation module, so which kind of really helps us manage some of the data issues and constraints and the dirty data, as Alex mentioned. So we source our data from all around the firm, and it comes into our enterprise technology solution, which we work with SmartStream on, and that allows us to manage these things really from cradle to grave. So from the moment something a trade is executed in the street and it comes to us, fees are attributed and accounted for, allocated right the way through until they're reconciled, they're validated, they're approved for payment, and the entries go to the general ledger. So we have this incredible lineage between when something first happened to kind of when it ends. So it really enables us to tell that story from beginning to end. And that's critical on a day-to-day basis. We've already spoken in this session around some of the complexity that exists within the various different providers and be it fee schedules or whatever it may be. So having all this kind of uniform and usable data at hand really enables us to articulate fairly in real time to the various different stakeholders internally where we may be sitting in a tier schedule, or we look at some of the changes that have happened off the back of Dodd-Frank. SEFs come to be with discount structures, and it's important that our people, the traders on our desk, they understand where they're sat within that discount tier, right? Is it the middle of the month and they're in the next tier? What's their marginal cost of execution for the remainder of the month? Do we need to maintain a certain volume to remain in a tier? So that's really how we manage it on a day-to-day basis, and having this enterprise solution really allows us to do that. There's a big concern of people on the webinar, and again, Alex mentioned the data, right? Data is key, and once you get that into a usable format, then really you have so much power and at your hands to be able to inform people to make optimal decisions.
It's really interesting, actually, Ben, listening to you describe Credit Suisse's perspective, and that is, it's not only about managing fees, it's also about enabling the business in terms of being able to make more judicious business decisions in the front office, for example, around trading strategies and where you execute and volumes, etc. Right? This provides a lot more kind of. This is more than just managing the bottom line. It's about enabling the business. Correct?
Yeah. We have a huge amount of kind of internal dialogue and conversation around how this information can help them make decisions. And if you think it's a financial services firm, a huge portion of our expense base is incurred in execution costs. So it becomes a critical reference point when the businesses are making decisions. So absolutely, we kind of involved in a lot of those conversations.
Good, lovely, thanks. All right, gentlemen, let's leave it there. The results to the second poll question are in, and just under 43% of respondents said that yes, we have such a framework in place supported by the appropriate technology. So just short of half have some system in place, and it's a technology-based system. And a further almost 30% said no, but it's on their to-do list. So I assume those are people listening in and trying to get a little bit more information about the do's and don'ts and the hows and the whys, etc., with respect to managing those costs. I'm going to open the third poll question up to today's audience. And the third is, if your organization were to implement such a technology to support efficient and transparent fees and expense management, where would it source that technology from? You have four options there. So I'd be very interested to hear your responses with respect to that question. The next question, I'm going to put this to Alex, and that is, Alex, do you want to talk, I suppose you touched on it in your previous answer, and when you mentioned dirty data and kind of all the data inconsistencies, etc. But do you want to talk a little bit about the technology and operational challenges that you're seeing at the firms that you consult with when it comes to them identifying those costs? Do you want to just let today's audience know what you're seeing at the firms that typically you work with?
Sure. So from a technology challenge, I would say that there is that inability to be able to take a trade fact, being the transactional cost, and transform that into an execution item that will eventually allow the decision makers to realize the bottom line benefits. A lot of that is centered around the cost savings initiatives that they're doing. So whilst there is no shortage of the technology that can process, the technology that can remediate, the technology that can execute, there isn't that right level of technology that can take the individual costing components, unitize it, and then showcase that back to the decision makers such that they were able to understand those expense drivers and how to marry those expense drivers back to those savings savings levers. So where I spend a lot of time with the clients is kind of dimensioning what those expense drivers are and then lining those up back to the savings levers. As I mentioned before, I kind of think about it a little bit as a holy trinity in terms of using the savings levers of the vendor repricing, the operational efficiency, as well as the demand management. Where we're able to add value once we have that level of technology and transparency available to us is really then to complement that with the market research. So where do we know price points to be? What benchmarking do we have that will allow ourselves to be able to sharpen the pencils on those savings levers by asset class and by product line, such that we're then able to kind of influence that bottom line number. Once we have that, then it's just more of a discussion with the stakeholders on making sure that you're able to build those building blocks to create the sustainable model and governance and framework such that you can have that connectivity tie-in between those decisions that they make and the eventual economics and financials that they're looking at. So the performance management of that in terms of tracking the savings, monitoring the sensitivity between the decisions that are being done at the front end and the individual components from an operations perspective all the way to the actual bill that's paid, that lineage is absolutely important. And that's where we're spending a lot of time with the clients in creating that level of governance.
From your client's perspective, Alex, while we're on the issue, from your client's perspective, is there genuine interest? Is there a keenness to develop a more granular, more transparent view of their fees, or is it something that they're kind of dragging their heels on? Is this something that is very high on their agenda when you're going into those organizations?
Well, it's interesting. What I would say is historically, I would say yes, they're dragging their heels in the sense that the eventual expense management and savings efficiency was something that was ingrained as a multidimensional product within the individual governance by asset class and by product, meaning it was every single person's responsibility to be cost conscious. Where that's changing is that it continues to be their responsibility to be cost consciousness, but you need a consolidated and centralized program to be able to identify and tie in those efficiencies across the entire enterprise. So one idea that fits well for one particular asset class can and should be replicated across the entire enterprise. And unless you have a centralized framework to look at that, you're not able to capitalize on those benefits. So I would say that the market has definitely shifted in the sense that, yes, now there's a lot more sensitivity given the need to have cost plus pricing, given the need to have those regulatory pressures to have improved transparency on their pricing. And also the bottom line is, where can these businesses impact their expense to revenue ratios to be much more profitable? And that starts with identifying what their quick hits and big wins are through targeting the large spend base, to making sure that they have available and complete data known to them in such a way that they're able to influence that from a competitive supplier landscape. And then that's where I now see that industry shifting towards looking at and defining those savings that are considered to be big wins, and then moving into the more complex areas that might take a little bit longer to compile and validate and create that sustainable framework by category, by asset class, by department.
Lovely. Okay, Alex, thanks. Let's leave it there. I'm going to hand the same question over to you, Ben, and talk a little bit about the technology and operational challenges. You've been at the company at Credit Suisse for just under 10 years now. Do you want to talk a little bit about the tech and the operational challenges that that Credit Suisse has kind of faced and addressed? You mentioned this is a journey. It's not a kind of a flick the switch and the lights come on and everything's all hunky-dory. This is a multi-year ongoing project where there probably isn't an end line, a finish line in sight. Do you want to touch on the technology and operational challenges from Credit Suisse's perspective?
Yeah, and I think you kind of hit the nail on the head there, really. Where it is a journey, and it's something that requires continual focus, right? There's always improvements that can be made around the margin, and there's always kind of the industry curveball that gets thrown at you that you kind of need to deal with in the here and now. So you can even think about it from an operational standpoint. Even if I go back a number of years, it was people were operating things like invoice trackers on an Excel spreadsheet. It was the operator's job to kind of go into an email inbox, pick up the PDF or the Excel attachment, log it in a spreadsheet, hand it off to somebody else, manually reconcile it against a trade database somewhere, queue the invoice up for payment, and then ultimately make payment. So you had this kind of very highly fragmented process touching on multiple places, kind of leveraging some fairly old or legacy technology. And then you think about where we're kind of able to get to now. It's you're able to you have to receive the invoice somehow, so sent into an inbox, but you have some kind of technology that is able to identify the emails that come in, extract the relevant data, file the emails, put them in the right queue for action. And then you're able to, with an enterprise technology solution, to a large extent automate the invoice capture in a relatively short time frame. So the enterprise solution becomes your invoice tracker. You know what invoices are out there. You know what you've received. You don't have these manual spreadsheets on SharePoint and wherever that people are working through. And then we already spoke around how it is the repository of all the trades and fees that you've incurred in a month. So and that's really like how we see the evolution of this. And then some of the things that Bharat mentioned is really expanding this ecosystem to other products and other areas and other spend bases, so that we can leverage that across other areas, and it gives you scalability, right? It's the if you think about the huge number of invoices that are received on a monthly basis, it's the incremental invoices that will arrive for because of some market event or something like that. So you're much more able to deal with them than having to layer them on top of a pre-existing manual process. So, we continue to see that evolution and really kind of pushing the envelope around the margins to automate all that process.
Good. Okay. Let's leave it there. I'm going to put a question to Bharat in a moment, but what I want to do quickly now is just have a look at the responses to the question: if your organization were to implement a technology to support efficient and transparent fees and expense management, where would it source the technology from? Almost 80% said a mix of internal development work and a third-party provider. I think given the maturity of the products on the market right now and the technologies available to capital market firms, you don't want to go and develop a lot of the technology that is already available off the shelf, so to speak. You don't want to do it yourself because it just costs too much. It's going to take too long. And very often the market has moved by the time you're ready to deploy. So it's no surprise there to see that there will be a mix of internal development work with a third-party provider. So with that, I'm going to open the fourth poll question. And this question reads: where do you think a dedicated expense management practice should reside? You've got 5 different options there. One of them, the final one, is don't know. Hopefully it won't be one of those. Sorry, hopefully it won't be that one. There are 4 other options to choose from. What I'm going to do is ask Bharat. Bharat, if capital market firms were to have a list of the functionality that they would need in order to manage their expenses and their fees, typically what are the functions that should be on that list? In other words, if we were baking a functionality cake, what should go into that cake in order for the platform or the series of platforms, technologies, to be considered competent in this regard? So I'm going to hand over to you, Bharat. What would you say to that question?
Thanks, Victor. So just given the fact that if we looked at the earlier poll question and answers around the quality of data that is coming into the platform, so I believe any solution need to have a very fundamentally strong framework to consume that information, to consume the internal trade data, internal executions, or any transactional information that's coming from internal systems, to be able to consume that information and standardize that information. And how do we do that is basically by internally, the platform should have ability to supplement and enrich and validate that information as it is coming into any expense management system. What does that do? It basically standardizes the reporting, the output. So what you're really doing is you're enriching what the output is going to look like from a consumer standpoint. So I think that's one of the critical aspects of having a validation framework, having an enrichment framework on the data that is coming in. The second aspect of it, which I would kind of really focus on, is having a repository of fee schedules. So we have various fee schedules coming from exchanges, clearinghouses, or various custodians which are in the public domain. Having that information standardized and with a very clear narrative of how that and digitizing those fee schedules is a very important piece of within the platform would play, because those are the fee schedules need to be kind of enriched on to enrich a fee on the transactions. The whole calculation will be based off of that repository. So having that across asset classes, having a very standard, consistent approach to digitizing that information is very critical. And then, of course, one of the things that we haven't kind of touched on so far is our ability to kind of record these expenses to the books and records, like the general ledgers within the firm. What that would mean is basically having a right level of or a expense allocation based on the service usage. So based on the service utilization, based on standard agreements between businesses, or even common cost-sharing agreements between businesses within a firm, the application or the system needs to have a framework to support that allocation, because I think it's very, very important to have that cost allocated to the right businesses at a very micro level. So it had to be either going down to the trade level, or you have various summarized line items within invoices for that service invocation from the firms and allocate those line items to the business who is utilizing that service. So having that accounting capability within the platform is another very important aspect of the platform, or a solution that firms should be looking for. The fourth aspect of that is, again, Ben mentioned earlier around the whole invoice processing. Firms are getting hundreds and thousands of invoices each month. Having automation processes around that, having ability to independently verify those invoices against what you have internally calculated, making sure that it has the right workflow of managing disputes on the invoices, managing not only external disputes but also internal kind of verification that needs to happen to have a workflow around that whole operational process. Because too often that process is email-based communication. There is no centralized repository of all the issues that are out there, and how do you manage those disputes? So it's a very important aspect of the whole function from when you look at an end-to-end life cycle of managing these expenses, or even revenues.
Right. Okay. Thanks for that, Bharat. Alex and Ben. Alex first, and then Ben perhaps after him. Do you have anything to add to Bharat's comments with respect to a platform to manage fees and expenses? Typically, what is the functionality that you believe is crucial?
Yeah, I mean, fundamentally, I think that being able to tie in the unit cost back to the financials is one of the key elements of establishing an important fact base. And a lot of systems don't do that. So if you think about even the roles and responsibilities of where people have today, systems are created to be able to settle a trade, to be able to capture an invoice, to be able to have a repository, a data lake of certain levels of information and characteristics. But to be able to depict that individual item of expense-driving components such that then you can tie it back to the enterprise of what is their individual expense from a financial perspective at a product level, at a desk level, at a trader level, at a business unit manager decision matrix level, becomes very difficult, and it's not a function of just multi-dimensional reporting, which is what I view today as one of the hurdles when we talk about technology. A lot of people think about it as just being a byproduct of reporting, but it's not. It's making sure that you have the right measures that allow itself to create that dimension on the asset class, on the business level, and on the individual products that are incurring those types of expenses. So the throughput from the front to back and making sure that you have the right technology to support and identify that costing incurring component such that then you can have the right metrics is where I see the fundamental challenge from a technology platform to be. There may be different applications out there that can tangentially solve it, but unless you're really tackling that business challenge on developing the right metrics to have that full connecting from execution all the way to invoice payment, all the way to the financials, there isn't one holistic application that can do it. So So having had a number of different systems that can touch into that and making sure that you're able to identify, depict, and use it as your fact base for decision making is of utmost importance, especially when you're thinking about the billions of dollars of expenses from an overall category perspective. I mean, we had initially talked about, if you think about the scale of what we're looking at here, technology and communications as a variable transaction expense is by far the most largest expense for many organization outside of the people-related costs. Secondarily is your brokerage, clearance, and exchange.
Right.
So having had the right level of technology to support that is of utmost importance.
Right. Ben, final comment from you. So let's talk a little bit about the functionality that is crucial. Do you want to talk from Credit Suisse's perspective? Obviously, you have a system in place. What do you think, if you were to advise somebody in your position at it from another organization and advise them about the really crucial functionality, what would you say to them?
I mean, I think I would reiterate a few things that we've kind of touched on in this call. Really, it's the critical functionality is the front to back management, or the real end-to-end enterprise solution. I mean, that's critical in terms of the transactional records happening and all the relevant fees being attributable to that individual record, and then touching on some of the things that Bharat spoke around in terms of verification, reconciliation, and allocation to the various different businesses. If you think about a financial services firm, or it's an amalgamation of a huge number of different trading desks, and the metrics and KPIs used internally, it's critical that the right costs end up in the right place. So, to be able to have an enterprise technology solution that, facilitates and enables that is of utmost importance. Good.
Okay, gentlemen, time has marched on, and we've got about 2 minutes to 4, so I'm afraid we're going to have to leave our conversation there for the day. I would just like to thank today's audience very much for their participation. The final poll question was, where do you think a dedicated expense management practice should reside? 2/3 of respondents said in operations. About 17% said front office, and 17% said procurement. So clearly it's an operations that should be part of the operations remit. That just leaves me to thank today's panelists, Ben Harrison from Credit Suisse in New York, Alex Ramirez from Helix Consulting, also in New York, and finally in New York, Bharat Malesha, who was speaking on behalf of SmartStream Technologies today, and today's sponsor. Thank you, gentlemen, very much indeed for your expertise and for an hour of your time. As I mentioned to today's audience, my name is Victor Anderson. I'm Editor-in-Chief of Waters Technology, and I look forward to catching up with all of you in the not-too-distant future. Thank you very much indeed for your time, and have a good rest of your day.